Our market monitor expects the stock rally to continue for the next 12 months. He's Erik Ristuben, Chief Investment Strategist at Russell Investments. Welcome, Erik, onto the program. You know, we just reported on a whole bunch of new highs. This has been an amazing run for the stock market. What do you think is going to drive stocks higher over the next 12 months?
Well, a couple things, but I think go back to the source of strength in the markets this week, primarily because of Gentle Ben. But we didn't see that he said anything new in terms of the chairman of the Federal Reserve. What he said was that the economic news is getting better, the U.S. economy is getting closer to not needing the full stimulus of QE3, and that they're going to consider pulling some of that back. And we think that's good news for stocks. We think that'll be good news for earnings going forward, because we think that growth, economic growth, will accelerate both here and in Europe in the back half of this year. Plus, you know, the relative attractiveness of equities to fixed income and cash is still there. Those other asset classes don't look particularly attractive, and that'll probably drive some multiple expansion. So a combination of good economic data translating into good earnings and the fact that there's nowhere else to go probably drives stocks forward.
As you know, Erik, we've been asking our viewers to send in their questions about individual stocks, and we're going to start with one right in your backyard, which I know you must be familiar with. Robert B. in Long Beach, California, wrote in about Boeing. He asks, I would like your analysis of Boeing. The company has unprecedented backlog, costs seem controlled, future products are in demand, and U.S. carriers have aging fleets. That against the backdrop today of two incidents that really handicap the stock.
Absolutely. We're underweight Boeing. So why don't we hold as much as Boeing as people would think we might? The basic reason is relative valuation of Boeing versus other stocks that you can buy. Boeing, even with today's 5% pullback, which you noted earlier in the broadcast, it's still up 35% year to date. It's actually had a very good one-year return. We think that it's a good stock, a good company, just a little pricey at this level.
Okay. The next question from our viewer is about Sony. Linda C. owns Sony. She says, quote, saw your program for the first time tonight. We hope, Linda, you keep watching. She's new to the market, bought Sony back in December of 2012 at $12 a share. Now it's over 21. She wants to know, should I sell it or hold on? What do you think?
Well, that's another stock that we're underweight, and we're actually meaningful underweight. She may want to consider actually a company like Samsung. I mean, Sony, it's another story of their stock price recently has been spectacular. They have benefited probably in no small part in the consumer electronics industry from being in Japan, where Samsung's market in Korea has not done as well, and their stock hasn't done as well. We think Samsung's a better value than Sony.
All right, let's move to Missouri, where Matt H. Is interested in a company called Seadrill. He says, quote, I enjoy your show each weeknight and find it very informative. Well, we're grateful to you for that. Can you please look at Seadrill, ticker SDRL, and tell me about what the future looks like for the company and its dividend?
Let's tell viewers that they're an offshore drilling contractor. So they own oil rigs and they drill off those oil rigs. Then now what you've seen is business has been very good for them since oil prices have been relatively high over the last 5 years. In response to that, what they've done is they've actually taken out a lot of debt because oil rigs are expensive and significantly increased their capacity, which isn't necessarily a problem on its own. The problem is the industry as a whole has done that. So we think that industry is going to come under price pressure in the future because so much new capacity is going to come online. The other problem is this debt that they've taken on. It's going to be hard to refinance at lower interest rates. Interest rates are likely to move higher.
Okay, Erik, thanks for all of those good suggestions. We appreciate it. Erik Ristuben, Chief Investment Strategist at Russell Investments.